A very good morning. Welcome everyone to Admiral Markets. My name is Chris. We're going to take a look at the Forex market and what trades we have today in just a minute. Before we do that, of course, the usual PowerPoint that we quickly go through. And just want to make sure that everyone hears me first of all and sees me. Is everything good to go? Hope you all had a good weekend. Yesterday was a bit of a slowish day, wasn't it? Pretty good. All right. Great. So we can start. Well, the risk disclaimer, of course, explaining that trading foreign exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this video and webinar, it is a live webinar though, is for educational purposes only. So thank you for your attention on that. Alrighty, as always, hosted by our Admiral Markets. My name is Chris, and we're going to take a look at swing trading today. Tomorrow, all trading, and Thursday, primarily intraday trading. I'll show you how you can actually sign up for those webinars. And from October onwards, we're going to have actually specific trading webinars focused on certain aspects. So it will be more specific and not so general as we do now. So I'm looking forward to that. Yesterday, we had a webinar on I think breakouts, and Thursday we have on fibs. All right, this educational webinars. We're going to take a look at strategies today, breakout strategies primarily, and we'll do that by defining the trend. It's always important. It doesn't matter if you're a range trader, reversal trader, or with the trend trader. We're going to define the trend, look for divergences, seek Fibonacci levels, support and resistances, so that we can establish a trend bias, that we can look for pullbacks, which would be our opportunity to trade it, because we don't want to buy at tops, nor do we want to sell at the bottoms. We'll check for filters, and then we'll decide, is there opportunity to trade, and if so, how? Alrighty, that wraps it up from my side. We're going to take a look at the Forex calendar, but before we do that, I'm going to welcome Michal, a manager at Admiral Markets.
Good morning or good afternoon, everybody. Thank you very much for tuning in for this webinar this fine morning. I'm pretty hopeful that you're going to enjoy it very much. I will now show my screen instead of the Chris's screen. Just give me 1 second, please. There we go. And I think we are in a good presentation format. For those of you who don't know me, my name is Michael Onhoff. I'm a client relationship manager for Admiral Markets. Here you can see my email, my phone number, and my Skype number as well. I'll be very hopeful that some of you will run a search on my name in LinkedIn, find me the connection, and add me, like a lot of people did. And if you have any questions by the end of the webinar, you can always ask me them via email or via Skype. I'll be more than thrilled to answer them to you. Thank you very much. For those of you who don't know me or hear me speak for the first time, before we get to serious stuff and actually look at live trading, I want to talk about something a little different. I always want to take a small break from currency pairs, charts, numbers, forget for a second about Japanese candles and Fibonacci lines, and today I wanted to speak about something that applies to every single one of us, that is very important to every single person who decided to participate in this webinar. And I'm talking about, of course, self-improvement. And self-improvement and personal growth, they have been a hot topic for a number of years now. And that is understandable. In this day and age, you must grow and develop yourself on a constant basis. You rely on book, you develop yourself in school and universities, and carry on in your professional careers. Just like an investment, a price of a future is always worth more than a spot price. And the same law applies to life as well. Yourself in the future, you must be smarter and better equipped than you are today. Otherwise, a future you stands no chance. And all of you took this time today to attend this webinar precisely for this reason, to develop yourself, to learn new things, and tomorrow after you watch this video, you'll be smarter than you are today. But I would not advise you stop here. You have entered a whole new world, a world of investment, where money is made and lost, a world that is a battlefield for the brightest minds of our generation and has been so for quite some years. Some of you are just considering to enter this new and exciting world. Some of you have taken some steps in order to explore it. Some of you are living and breathing investment. To those of you who are still considering to invest or not, well, you should consider the following. Once you enter the world of investment, you will change, and your life will change, and you will never be the same again, and you will be better. Not only does investment give you a chance to earn, because no one can guarantee your profit, but what I can promise you though, what I can guarantee you is this. Your horizons will broaden. Forex is a very demanding investment field. You will be required to follow the news, and you will be surprised how much involved in current affairs you will become in just a few weeks. Technical and fundamental analysis will give you information in order to make a correct split-second decisions. Your analytical skills will improve. And this is a tool that will help you not only in the financial market, but in all aspects of your everyday life. Decisiveness. Forex trading is all about your decision making. A second can separate a profit from a loss. And you will learn this skill. You will be the one calling the odds. You will take this skill from the financial market and you will be able to apply it to everything in your everyday life. After all, isn't life all about decisions too? I'm pretty sure it is. And you will see it for yourself. It will no longer take you, say, a few minutes to choose a meal in the restaurant. Your new decision skills will make these decisions quickly for you. And most importantly, this decision will most likely be correct. But most important, one of those days you will take a loss. It will happen because it happens to every single trader out there. And once it does, you will learn the most important skill, self-discipline. Believe me, money is a great motivator, one of the best there is. And I will teach you that a profit is not a product of luck. It's a product of hard work and dedication. Those of you who invest regularly will agree with me. Investment is a trip worth taking. So mark my words, register a real account today and make your first trade and see what happens. In a year, you will be able to look at yourself and you will understand. It was not just a financial affair. It was a great learning experience. Some of you will make a loss. Some of you will make big profits like a lot of our traders do. But all of you today, 100% of those who enter the world of investment and forex trading will all be better people. Knowledgeable, decisive, and disciplined. Guaranteed. If I could buy a derivative on you today, I would loan you in a heartbeat. So register an account, our minimum deposit is just $10, and see how in the future you'll be worth a lot more than you are worth today. That is something that I can promise. If you have any questions, you can always email me or you can find me on Skype. I'm always there for you. But before I give my microphone back to Chris, I wanted to tell you that still for the rest of the September, so you don't have that much time left, we're still running a special webinar bonus. So you can receive a bonus if you make a deposit over $1,000 before September ends. For more details, you can always reach me, and everyone is eligible. So it's a great webinar special bonus on all the deposits more than $1,000. For details, please reach me, and here are all the details again. Here's my email, my Skype, and my name. I hope you've enjoyed this. Thank you very much for listening. I wish you a pleasant live trading session, and I will now pass the microphone back to Chris. Thank you very much.
Thank you so much, Michal. Always great stuff and a great offer there. So definitely try it out. Take a look. Ask him because it's well worth your time to investigate that. Such a great bonus offer. We're going to take a look at the Forex market and its opportunities today. In fact, you're looking at the Euro-Yen right now, and I've got a pending order here at the moment. I will revisit and reanalyze this entry that I have with you and see if I still like it or not. But at the moment, I have it on. And we'll discuss that in a second. And in fact, first, before we do that, I promised you the Forex calendar, didn't I? Let's do that first. And we have Euro German IFO business climate in 1 hour 40 minutes. We have CAD retail sales, and we have USD CB consumer confidence. Okay. The rest of the week is otherwise quite minor. I mean, there's no significant impact, just some usual red impact news. Alrighty, back to our charts. Well, last week, of course, we had FOMC, and the market is still kind of digesting that. We had a huge surge in risk on, meant that equity markets were going up, S&P 500, Dow, but also the indexes, equity indexes in the how do you say it, the evolving markets? No, I forgot the word, but you know what I mean. The emerging markets, that's the word I was looking for. Went up a lot, just like the Aussie, New Zealand gained a lot of strength, and the dollar lost a lot. Gold went up a lot, but we haven't seen any follow-through so far. So basically the news event creating a lot of impulse and momentum and a big spike, but slowly but surely the dollar has been correcting upwards. And the question is, will we see that continuation finally or not? And if it takes too long, then it's probably going to be not that continuation as we expected. I would still give it the entire week. If it doesn't happen this week, something else is going on. Let's start with the euro dollar anyways. You can see we're making a bull flag as we speak, right? We had that huge impulse, that was Wednesday. Otherwise, the rest of the week, in fact, the market went flat. Didn't do anything after that, just went sideways, and yesterday as well. Totally no movement. That's why sometimes Fridays and Mondays are just difficult to trade, and nothing we can do about that if the market is, not in a position to move at all. That's always the tricky thing with trading on these days that don't have that much liquidity. Do you get movement or not? Yes, no. I took a position on the Kiwi yesterday, just didn't go anywhere. All right, and usually my rule is that I take it off if it doesn't go anywhere for hours and hours and hours. This time I didn't because the Kiwi sometimes moves pretty well in Asia, but unfortunately moved the other side, so I took a loss on that one. So not a good start of the week for me, but I'm going to quickly, sorry for that, I'll just quickly open my drawing tool so I can communicate a bit better. I forgot about that this morning. So besides FOMC, basically last week was nothing. Sideways, FOMC, sideways. That was last week. So can't do anything about that. This week we had a continuation of that bull flag. So basically looking for that continuation with the trend, which is up at the moment, with the momentum and a breakout of that bull flag. It's pure and simple. That's all I have to say. That's all I think we need to know. The target is 136.40 at the moment, although 136 is a resistance level as well because that's a 886 fib of the entire down move, by the way, just like 137 is a top. So 137 and 136 are still resistances. Otherwise, if we break, that's the trade where I have the green circle to the upside, in my opinion. Does everyone hear me, by the way? Just want to check one more time. Excuse me for that, but someone is saying that there's no sound. Okay. By the way, Meredith, I'm not sure about your question. I would have to check, and I'll let you know, okay? So basically, to keep it very simple, we have all of these situations on all of the currency pairs. Euro dollar, pound dollar, AUD dollar, Kiwi dollar, all of them. They're all similar. All have FOMC spikes. All have corrections similar to bull flags. So that's kind of a situation where the diversity is lacking in a way. So we can look at the crosses to see which of these are stronger. Will the euro be stronger against the dollar, or is it the pound, or is it the Aussie or the New Zealand? By identifying that, we can see which one might break the soonest and the strongest of these that I just mentioned: euro, pound, Aussie, and New Zealand. And of course, we can take a look at the yen, because I do see, as I already said, on the Aussie yen and euro yen primarily, interesting setups. But maybe the New Zealand yen, in fact, and New Zealand yen and the pound yen probably similar. But I found the euro yen and odd yen the best setup, and I found the odd Swissie pretty interesting as well. So those are my main opportunities of today. Those 7. But of course, 4 of them are very similar because they're all against the dollar anyhow. Alrighty. Let's take a quick look then at the pound, and you'll see it's similar. This is the 30-minute chart. Here too, corrective move down. Aussie 1-hour chart. Here too, kind of in a triangle. If we take this line and connect these bottoms in a way. Triangle / bull flag. But you're still seeing the euro dollar, in fact. That's a bit strange. Let me refresh the chart, otherwise that's odd. One second, folks. There you see it, right? Good. Yeah, that was a bit weird. Okay, now we're back on track. So that's the Aussie. This could be a bull flag or triangle. Let's move over to New Zealand. I hope the chart changes as well. Yeah, there it is. Here too, bull flag within that very steep uptrend channel indicated by the blue line. Kiwi making a very aggressive move up. You can see at the angle of that uptrend channel. Do you see that? Very steep, very aggressive. So in a way, the Kiwi is something that's what Kiwi saw yesterday, because in fact it was went like this, but didn't get here. Got up line, and the prices went sideways, flat, no active breakout, unfortunately. So that's why time factor is important in most cases, because it does indicate, like, all right, a lot of time went into here, and within that time we didn't get the active breakout. And many traders don't use time factor in their trading, but you can see that, you know, that was the moment we're supposed to get a breakout, and we didn't get it. And I knew that. There were other reasons why I still kept it on. There was a discretionary side or element from my side, but the time factor was very obvious for me. All right, is this something that you can see why at that point we need that breakout? And if it takes too long, and let's take a look at the hour chart now. Basically, we had to break out here. We took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Not going. It will give you a big, big advantage, because not many traders look at that. And in fact, while using time factor would give you a mega heads up and advantage. Right? And if you don't know how, ask me. Otherwise, I'll assume that you watched the video on time factor, but we can go through it again later on, maybe, if you're interested. Let's take a look. So those are the Kiwis, and Aussie, pound, euro, all the same. There's no divergence, by the way, on all of them, because there's just a massive move up on Wednesday. That momentum created such a spike and such a power that no divergence there. Oh, bullish divergence. Sorry. You mean between the bottoms? Between these bottoms, maybe? Maybe. I wouldn't look at it that much. It's a very small time frame. But obviously this is very strong, and all of those have it, in fact, pound 2, a bit less strong maybe, but Aussie, they're all very strong readings. Good, let's continue with the odd yen. Here too we have, in fact, a move down to, I think it's a 786 fib. I took the fib off, but let me put it on again. Yeah, 786. And a pretty good bull flag. So I'm waiting for a break of that bull flag. Let me take a look. In fact, we could be breaking it very soon here. Yeah, we can be breaking it right now. So I'm going to dive into this odd yen. And I'll put a pending order on that one. Put the stop loss at 93.05. Treat this as a breakout trade. And I'll be trigger happy, as Tarantulas says, and go for the initial breakout here. Or I could wait for the break and hook back. Although it looks pretty impulsive. Let's take a look at 15. Now I'll try a small position on the immediate breakout. Let's take a look here. Here are the numbers, by the way, if you wanted to, on the left upper corner. Target is a bit too high probably. Let me aim for 2.5 to 1. That'll be 75. Alrighty. That's the breakout idea, at least on the odd yen. Just like the others, but the odd yen is breaking a bit sooner because of the yen, most likely. That you see the dollar yen is moving up as well. So that's pushing the odd yen a bit more than the odd dollar. And maybe the euro yen, I had a pending order here on the euro yen. Yeah, I was doubting this morning heavily on taking the immediate breakout here or waiting for the break and pullback. And I wasn't ready to take it here on the breakout initially. I was really looking at it for 20 minutes, doubting yes, no, yes, no, but then decided not to be trigger happy and wait for the pullback. And sometimes the pullback isn't deep enough because I was waiting for, if I fib this, a 50 fib, as you can see, and it went to the 236. That's a shame. Would have been really up a lot because I was looking at this right here, 133.40, stop loss 133.20, 20 pip stop loss here. Would have been up already 40 pips. Oh well, what can you do? because it was early in the morning, I rather have wanted to see the impulsive break and like that, but unfortunately, no pullback there. That was the trade idea, and in fact, the entry would have been 133.42. Here, there you have it. That was the trade setup here on the left. You can see the numbers there. 133.42, stop loss 133.10, the take profit 135.60. So it was approximately 220 pip reward for 30 risk. That was a 7-to-1 setup there I was aiming for. Oh well. What can you do? Could still probably hook back here and maybe bounce, but I don't know. I'd rather, if it were to hook back maybe that low, maybe buying it up here is a bit risky. It could bounce to the minus 618 target, definitely. It's not kind of the swing trading I was looking for. I was really looking for a swing trade, and if we buy it up here, it's more like a small intraday trade. I don't know, probably better than the odd yen. Maybe I'm already in the odd yen. Yes, I am. What else is there? Let's take a look at pound yen. Pound yen is breaking as well. Looking for a breakout continuation, just like the EJ. A lot of space probably on the yen, in fact. By the way, I got a message from Michal that the offer, the special bonus, is for everybody. Okay, so it doesn't matter where you're living, if it's Australia or Japan or US, or should be valid for everybody, I guess. I'm not. Maybe there are some countries not. I don't know, but even if you're old or new client, okay. So take a look at that. Yikes. I wish I was trigger happy this morning. I have to tell you that. Yikes. And that's why I had an ambitious target, 135.60, all the way up here, way up here, because to me, this seems like a bounce off the 618 fib, which means if you bounce off the 618 fib, there's a high chance of going to this 272 target. Now, of course, there's some resistance in the way, but when we broke this triangle, that's why I was thinking this could be a great trade, continuation up to that target. Bounce off that 618 fib, you can see that's the setup we're looking at. Oh well. What can you do? Moving on. Anyone else see something they wanted to talk about? Because those were the opportunities. In my opinion, this odd yen breaking the euro yen is already well on its way. Unfortunately, that broke way before we had our session, so nothing we can do about that. We can take a quick look again that the euro is pushing, though, is approaching that breakout. Odd, and New Zealand not so. So let's take a look at the euro one more time. Yeah, that's why the EJ is flying up so much. It's both the euro and the yen weakness. I mean euro power at the moment, and yen weakness, aiding extra fuel there for the euro yen. Well, the euro could still be good. The euro is approaching that trend line. Could still be a good breakout. In fact, I expected euro strength already because of the, if you look at the euro odd and euro pound, they all made 5-wave reversals. For those of you who like LA waves, if you look at it, all of them, let me take a look at this. This is euro odd 30 minutes. And you can see a clear 5-wave structure there on all of them, euro odd, euro pound. The euro yen, I think even, the euro yen was already upside. Even though that the euro odd and euro pound were in downsides, they made 5 waves here. So then the likelihood of continuation is pretty high. In fact, you can see I had a 5-minute bull flag on the euro odd, and we broke out of that, hooked back, and continuing. So I expected euro strength, and looking at the dollar yen, I expected also yen weakness. So that's why euro yen was one of my favorites. But yeah, that's sometimes what happens, is that the entry, although you see the analysis, the entry just totally, unfortunately, escapes. Nothing you can do about it. The euro yen, euro dollar entry, let's take a look at that. I'm still waiting, in fact, but well, if you want to, okay, that's a bit of a different trade, Kalen. You're trading, in fact, the top of a bull flag for downside. But you know, in fact, if you're in a bull flag, what you rather trade is the bottoms, right? Because then you have a chance for breakout. Not necessarily maybe the first one, but the second one. If you take the bottom, then you have a chance of catching the breakout as well. Unless you're really targeting the tops, then it wouldn't make sense. If you're trading the top of the bull flag, yeah, you have some reward there for potential, but maybe once this time you would be selling it and it breaks out, in fact. So I'm not a big proponent of necessarily you know, selling in a bull flag or buying in a bear flag, especially with such a momentum in front of it and such an uptrend. So what I'm waiting for is a breakout to the upside. And yeah, and Johan is asking me if I'm always trade breakouts. That is my primary focus. That's my niche, my edge, my primary edge. And that's always important for your own trading, is to create an edge and play it out over and over again. That's the key, to apply that edge with consistency and discipline and patience, and then you'll see the equity curve going up, and you'll have the confidence to implement it. But it's not always the only thing I trade, but it is my primary focus. And sometimes I do trade reversals. I took a short on the euro dollar here at 135, I think it was. As you all know, at the 886 fib, I think, I don't remember the price anymore, but that didn't go well because the price of FMOC went through it. So sometimes I'd look for reversals at key support and resistance levels. key turning spots that are potential. But my primary trading is with the trend, with the momentum breakouts. And sometimes, as you see, 3 green arrows on my chart. And sometimes I do look for bounces, counter trend, and I pick levels. But those are definitely less than the 3 green arrows. If you go for reversals, then you have to compensate it with a lot of reward to risk, because the chances of catching the reversals is very difficult, and you need a lot of experience for that, because most of the time the short-term momentum just keeps pushing up or down with the trend and squeezes a lot of long-term traders out of the market. So for example, you're in an uptrend and you see divergences, but it just keeps steaming up, keeps steaming up. You see maybe some long-term elements, trend lines, fibs, resistances that make you think, oh, that could be the turning spot. But the short term just keeps pushing up and just squeezes all the long-term traders out of the market and then turns. So most of the time it's just more upside and more trend continuation or downside for that matter. Trend continuation, I should say, before you get that reversal. And it really takes an experienced eye to catch those, and a lot of patience to catch those. I don't have that patience, basically. I rather not focus on it. For me, it's a lot easier to see and trade those breakouts. Alrighty. Euro pound, in fact, is approaching the top of this trend line. You see that? That's something I wanted to keep an eye on, because I thought that we could get that breakout on the euro pound as well. As I said, I was looking at euro strength already. Odd Swiss is not breaking as yet. Dollar Swiss is making a bull flag here as well, but just like the euro dollar, we'll have to see if it breaks and when. If it does, then it moves down to around the 90 level, which is the parity, or yeah, not the parity, but the whole number as well, of course, would be the target. Just keeping an eye on these setups here, seeing if anything is moving. Dollar yen is moving pretty fast off this 50 fib. Both were an interesting break, but I like the EJ more because of the euro dollar. The euro dollar was set up technically in an impulse and a bull flag, as you know, of course. That's why I like the euro yen a bit more. But the dollar yen also, as you can see, I had this triangle on my chart looking for a break off the 50 fib to the upside. That's what happened. Unfortunately, it happened before we had our class there, but the odd yen did happen in our not class but webinar in our webinar, and up about 5 pips, I guess. I'm going to avoid looking at the euro yen because I'm just going to be annoyed if I looked at the fact that it would have been 60 pips up, and I'm going to repeat that probably a few times this session. Oh well. Yeah, especially probably if you have feelings of annoyance like that, it's probably better not to trade at all, because if anything, I'll probably be revenge trading then. It's right at the target though, minus 618. The smaller target, right? Not the bigger one. As you know, the bigger target is all the way up at 135.80. Yeah, life goes on. What can you do? Well, with me, it always takes a bit long if I miss something like that, especially because it's such an impulse. So that won't be easy because I'm primarily focused on breakout trades. So I'll be bashing myself for that one. Euro New Zealand is also breaking to the upside, maybe. Let me put this line on the lower time frame as well. Right at the top, so that's a bit difficult. Well, long here up to 170. What time frame are you looking at to take that trade? It really depends what time frame you're looking at. The day? Okay, that makes sense. Because if you're looking at this 50-minute chart, you obviously see, as well as I do, that we're right at the top of the trend channel there. So, but if you're in a day chart, that's something else, of course. Alrighty, let's take a look at that. The 170. 170 is definitely possible. We can, in fact, I forgot, we can flip this around already, this fib, if I can grab it. $170. Let's take a look. Yeah, that makes sense. That's a 786 fib of that entire down move. It could correct there, indeed. It extended quite a lot. Even if it continues, it's going to make a hook back and then maybe fall, right? So that makes sense. This is kind of like a bounce trade on the day chart. This is a bounce trade, and that bounce could eventually run into resistance and send it back down. But even though we had this huge down momentum, the upside is a pretty good probability, just as a bounce, dead cat bounce. Makes a lot of sense. Be good though to push above, which we already did in a way, above these 4-hour fractals. So yeah, probably pushing above the 162.30 would give that indication that we're making that. So that could be a good swing trade. It makes sense. That would be that's the risk. Let me put that in red, in fact. That could be the reward there. It's a pretty big stop loss probably. $170. So it depends if you like to take trades with big stop losses, but the reward is definitely there, the potential reward. Let's see, New Zealand yen, someone was asking about the Swiss yen. Let me find that 1 second. There it is. Now to template these tools on the chart, they're basically the awesome oscillator. Do you know that one, Peeler? The awesome oscillator. And the fractal indicator. And moving averages 34 close, high and low. And the 150. All right? Now, by the way, I want to take this moment, we're about halfway, to show you one thing. Just in case, by the way, Piotr, if you don't know, it's an insert indicators. Go to Bill Williams, and you'll find the fractals and the awesome oscillator, and the others are just moving averages. All right? By the way, I just wanted to have your attention for 1 second, extra attention, is that if you go to education, go to webinars, go to sign up, and you can sign up for tomorrow's session, market analysis and trading, or the intraday trading on Thursday. And anyone who joins and signs up for Wednesday and Thursday, either this month or next month, I'm going to give you a free indicator. I've already given it away to someone, so I thought why not to everyone who joins us on Wednesdays and Thursdays, all right? Because you'll have to add yourself there to sign up, and then you'll get that indicator. And what indicator is that, you might wonder? I think it's a pretty cool indicator, but if you know, it's up to you. Let me quickly show you that one. There we are. It would be, let's see, right here. I'll show you the 4-hour chart. It would be this one with the band on it as well. So not only this, but you also have the band on it. So this plus the band, basically, all in one. I think it's very cool for trend indication, trend definition, makes everything very easy, and really saves a lot of troubles in a way. You just look at the day chart, you can easily see visually what the color is of those candles. That just helps and supports the ease of looking at the chart. So it's for free anyhow. All you have to do is sign up as a bonus for everyone who's been joining so far and who wants to join as well. Okay. So anyone who missed that, who was maybe walking away or multitasking, once again, if you join on a Wednesday or Thursday in September or October, you will get this free indicator from me. I love it. I'll be honest with you. I love that indicator. And I think it's a great tool. So, you know, it's worth if you just join it, you have it, it's worth taking a look at and having it on the side maybe, if depending on how much you like it. All right. So, anyone going to use this opportunity? Anyone like this indicator? Or is it like, I don't need it, but I'll use it maybe? It's it's a great way for me to see where the what the psychology is of the market. It's not really for trading. Yeah, it changes colors indeed. So it's just easy for trend definition and seeing where what the momentum is of the market. You'll have the band on here as well, so it really gives a good idea of, for example, here on the 4-hour chart, you can see what the momentum is and what the trend direction is very clearly, especially if it's trending like this. Up, down, up. Now obviously you'll have some kind of, when it's in a range like this, you'll have something like that. Of course, that's something you still have to analyze yourself, but when it's trending, you can obviously see the power of it. And that's why this gray band is here. Basically you have the, well, we'll call it the double band. Maybe that's the best. The gray band you'll have on it, so that you can see that even if it breaks above the green band, which will be on this chart as well, then you can see, well, let me quickly add it so you can see the full. I have it pink on here. Okay. The pink band, let me go back to that spot. You can see that although the price breaks above the pink band here, it's still below the gray band and well set within that downtrend. So that's why both the pink and the gray band are there are on this chart, excuse me, just to indicate, look at this, price above the pink band, but there were some deeper hook back, and where did they stop? Right at the gray band, right? Here too, by the way. Only after push through the gray band did we actually get the full-fledged downside there. So it's a very cool tool, and I would definitely, encourage you to investigate it and not use it for necessary trading, but for analysis purposes, directional purposes. It's really great. Well, anyhow, I've vented my enthusiasm. Now it's up to you if you're just as enthusiastic or not. But anyhow, it's a free gift to you. Swiss yen. Let's take a look at that. Did anyone join me on the odd yen, by the way, while we're waiting for the Swiss yen chart to emerge? Maybe it's not working. Let me take a look. It's making a bit of a retrace right now. Oh, there it is. Just taking a look at the odd yen here. Does anyone in the, I got a few answers, but not many. There must be more answers. Who was in the odd yen? Did anyone take it? I got one person saying yes, 2 no's, but I would like to see a bit more answers. Come on. Odd yen, yeah. Someone didn't know about that. Okay, that's okay. Alrighty, we got some yes, some with a small position. Let me just quickly take a look, okay? I wanted to show you this Swiss yen, but it is pulling back, so let's take a look. Someone's saying if it's wrong to trade because of this resistance. That's the thing with breakouts. You're always buying into resistance, as Donato says, and selling into support in a way. That's the whole breakout concept. And you're taking a trade in the sense that you're looking for it to continue with this momentum. Obviously, there will be moments where you have, with this bull flag, still small resistances, but the whole idea is that you continue like these green arrows. So for me, it's just a 1 hour resistance. It's not really that important as maybe a 4 hour, which is a bit higher. There's a 4 hour level as well, maybe a small one here, indeed. Yeah, could have. It's a particular strategy of mine that is set for this. So that's just a statistical statistical advantage I'm playing out. That's it, pure and simple. And that resistance wouldn't be enough for me to alter that, to not take that setup. Let me say it this way. It's a breakout strategy setup. And you always have, with breakouts, a bit of resistance that price will have to punch through. There's a high probability of that. Because if you wait for the entire move to break all of this, then you'll probably have to wait for another bull flag. Then you'll have, again, resistance somewhere in here. So there'll always be a bit of resistance. Basically, the 1 hours are building candles. That's all I need to know at the moment. And if it breaks last hour's or this hour's low, I'm out. That's okay. I don't need to be in. Basically, just taking a trade and trying to see the continuation of those hourly candles to the upside. That's all. If it doesn't do that and it breaks this hour's low, then probably we'll go back to the bottom of this bull flag, and this was a false breakout. That can happen. That's why I said I'm trigger happy at the moment, because I'm taking it upon the break. And what I didn't do on the EJ, right? If you're not trigger happy, you would wait for this 1 hour candle to close and see how the candle looks like. If it has a big wick, you don't take it. If it has a good close, you could wait upon maybe the retracement of that 1 hour, enter there for the long, maybe at the same position. But there is the chance that if you're not trigger happy, like what happened to me this morning with the euro yen, is that it just really blasts and go. Let's take a look at that euro yen. Here too, the entry was right in front of resistance, but lower time resistance, right? But this one blasted and went, because it's the psychology of the market. It made a huge up move in an uptrend, hit the 618 fib, and people recognize that it's turning here, and boom, you get that interest for the upside. Alrighty. Yeah, the Swiss yen, of course, Very interesting because it really broke above this 108.60, which was the massive high, I don't know, the last couple of years at least, all the way back to 2006. Can't see further than that, so, and I don't know exactly what the Swiss yen did before. Oh, wait, I can see all the way back to 1999. Never was that high. Never, don't know what happened before that. I'm not a Swiss yen expert here, but obviously the high of the last 15 years, breaking that is quite impressive, first of all. The question is, how high can we go? Well, let's use our fibs here. You see what I'm doing is I'm putting fibs on these moves, seeing where the price has hit the targets, then moving the fib to the next swing high, swing low, trying to identify what the most likely target could be here for the Swiss yen. If you fib this move, which also looking at the oscillator, you can see if you look at the zero line, it was here, and if you look at the zero line, that was here. So if you put a fib from here to here where I have the green circles, you can see we had a 236 fib, and we're right at the 272 target. So that's where we stopped, and we've had a couple of days respect for that, which is normal. So if we break above there, the next target would be the minus 618. In fact, that would be all the way at 116. It's still a lot. We could put a fib on something smaller, though, like, for example, this. We had a 618 bounce, and that 272 target is pretty close by as well. That's 109.90, and price at 109.40. 109.90 could still be a level just with the 110 even number. If we break that, the 618 is at 113. So 110, 113, 116, those seem to be the targets here for the Swiss yen at the moment. Could put a trend channel like this as well. Pretty good channel, as you can see. About 6 hits at the bottom, well established. So that could be another, resistance spot when we get up to that. Anytime we hit that top of the channel, it could be a moment for the currency to stall there. Good. Let us take a look at that euro. What happened with the euro? Nothing much. Hanging at the top of that bull flag, in fact. So a break of that level would be interesting for me. See, I was waiting for the euro dollar to indeed pause at that trend line, and the odds of that happening are pretty high. I knew that. Most of the time it does, and the next break is something of interest. It might not break, but if it does, it's interesting. And there's always a chance we go back to the bottom of the bull flag, but that's something that I wouldn't want to trade because it's just a coin flip. I don't want to trade coin flips. I want to trade where there's a statistical edge. Alrighty. Euro pound is at the trend line as well. Pound Swissy, by the way, is broke that uptrend channel we were talking about last time. We got the bounce here, as we said, but if it breaks that channel and goes into that zone under here, that would be short. I don't know if anyone was looking at that trade or taking it, but it went right to target, right back to that trend line we were talking about, and that's that orange ball that indicated that zone we were looking for that downside. So that happened pretty nicely. Hot Swiss also broke a consolidation to the downside. However, still think that there could be space for more upside if we were to break this green line, at least back up to the top. Would be more like a range trade, in fact. We're not doing that at the moment, but if we look at the 4-hour chart, you can see that we're kind of bouncing back in between support and resistance. We're respecting the 618 fib, but we also made a pretty aggressive move up here and bounce off the 382. So if we break that green line, it could be moved back to the top or maybe up to the 786 even. Maybe, for example, a break of this trend line could have been interesting, but that happened, during my night, at least during Asian session. That was not a bad break, maybe. That was like a bounce break. Yeah, bounce break reversal trade, in fact, but that was last night. Now at the moment, I wouldn't trade it to the downside because it just doesn't have any structure that I like. Let me say it this way. Dollar Swiss, we talked about it already. Euro CAD continuing that uptrend as well, by the way, has some space to the upside, but let's take a look at the 1-hour chart one more time. Yeah, could bounce. What I'm looking for is a breakout, in fact, but at the moment, looking at this, it could easily maybe continue back to the 786. There is a bit of a supply and demand zone here, by the way, and tops as well. So anywhere in here would be kind of picking a level where you can see the trend continue. That's around 138.20, 138.40, somewhere in here. Now, if we put a fib on this first down move, yeah, the minus 618, 18, and 886 have some confluence there, but otherwise not this much. Let's see what the difference is. 618. Well, it's only 10 pips difference. Maybe. So probably see it pop up. I respect for that. And either a move back down to the support or a bounce already. All right, so that's why either a move down to the fib, as I'm drawing on this chart, just in case you're wondering, either a bounce down to the fib and off the fib, or a breakout of that blue line, the future trend line, and a continuation for the upside. That could be interesting on the EuroCAD. That was the, sorry, that was, which one was that? EuroCAD, sorry, not DollarCAD. EuroCAD, this is the DollarCAD. And in fact, maybe there's a inverted head and shoulders here. Not totally sure what the DollarCAD is doing, in fact. It looks very funky because it has a break of the uptrend channel and straight back, so I'm in the waiting mode on that one. Nothing much is happening at the moment. In fact, pound yen is moving up, so it's approaching a trend line. What I want to see on the pound yen here, yeah, exactly. I want to see a fractal hitting that trend line. Let's see, if we get a bit of a respect for that trend line and then a break, that's a typical breakout trade that is very nice to trade. You can see the price is respecting that trend line as we speak. Now, I wouldn't want to enter it here, and the difference between here on the 5-minute chart and the EJ maybe this morning or the odd yen is the fact that the difference is that this already moved up 80 pips within a few hours. Let's see how much. 3 hours, 80 pips. So I would like to see a bit of a stall an hour or two before continuing. Yeah, we have news. That's good. Indeed, good observation, Darshan. Thanks for that warning. Watch out with that euro. Skip it because there's news around the corner. Thanks for that. I always forget the news event. All right, but that's the difference. If for example, the euro yen just started, all right, the move just started. Let's go back to that euro yen here, right? It was just starting. So I didn't want to be trigger happy, which I should have, as you know, but it just started. So that's the difference where you can use that 5-minute chart easier, or 15. You don't need it's just a fresh break in fact. While the pound yen already moved a lot, so you want to see a bit of a stall here before continuing. All right, let me answer some questions here. Caitlin is talking about the euro dollar. Not sure what you mean. Got rejection 135.11. Well, oh yeah. Well, I wasn't surprised with that. As I said, again, I already expected that bit of a stall there because of the trend line. Or I don't know if it's because of that, but that's at least my interpretation of the charts. Let me say it this way. So usually that does pan out, and so I wasn't surprised that it stalled there. To me, it was a stall, just a pause, not necessarily a rejection. I would need to see more happen before I consider it a rejection. Let me say it this way. All right. Personally, I wouldn't call it rejection. I call it a stall. But it's just to play with words, I guess. But the difference is that a stall means that there's a likelihood of continuation, while a rejection would mean that you expect total downside for I don't know how long. There's a massive wick coming on the odd yen. So if it closes like this with 1 more minute to go, I will take off the trade, or I will aim for break even. Let me say it this way. Because then this was a false breakout. And those were one of those cases where you wish you were not trigger happy, right? Now that there is a wick doesn't necessarily mean it cannot continue. By the way, it could, but the chances of my testing indicate that it's less probable, obviously. So it's not worth the risk in most cases, unless there's clear discretionary reason to keep it on. If there is a wick like this, I just aim for break even like it does. Candle just closed. So what I'll do is just put a take profit. Oh, I forgot to put the stop loss in. That's stupid. Let me do that quickly, by the way. I thought that tool did it for me. That's strange. That's a bit weird because I cannot punch in any numbers at the moment. Wait, let me copy that. All right, so that's solved. Problem number 1 is solved. Don't know why my numbers are not working, but now mind you, this 1 hour wick could be a rejection, but it could just be a logical break, pullback, continuation as well. But as I said, in most cases, depending on the situation to situation, I either take it off for break even right here upon the retracement of the wick, or I do keep it on and want to see a continuation. In this case, I think it is a likely bouncing spot for more upside, but maybe we'll wait a bit. The 50-minute world made a pretty good move up here, so we could see a bit of a retracement there. So I'll just wait and see a bit longer. So let me copy the TP then in that case to 229, and that will be my break-even point. Oh, well, it's taken off for break-even there. So, you know, there's never any even if you rush, let me say it this way, I mean, even if you take the trade and you don't like it, there's always often enough, there's still an opportunity to take it off if you wanted to. Like the Kiwi yesterday, I could have taken it off probably 3 times, but I didn't, stubborn enough, because those were one of those discretionary elements where I thought the continuation and the structure of the market was so set up that it would still have a pretty decent chance of continuing during Asian session. If it was the euro, I would have taken it off because I know the euro doesn't move during Asian session. With the Kiwi, it does move, and I saw that as a pretty good probability, so I kept it on, although it was actually my rules to take it off, right? Alrighty, where do we see the euro? Let's take a look at the news first of all, and then we'll take a look at the pound yen. If I missed your question, apologies for that. Oh no, Dustin is asking about the pound dollar. Let's take a look at the pound dollar. We need to take a look at the calendar first. Let me do that. Or does anyone have the numbers? Wait, let me take a look. Negative, slightly negative, German IFO Business Climate Index. You see, and this is what Toronto is often talking about, is this bounce right at the broken trend line. Here you have a pretty good chance of getting 10-15 pips. So that's always an interesting scalp, as we already discussed on Thursday. Even if you get a rejection here for more downside. Anyhow, yeah, euro is getting an effect off that the news. Broke the bull flag just by a tad, a few pips. Obviously, not enough to break it a lot, and it's good we stayed out of that. Still looking for a break of that bull flag, though. That didn't change. This news event could just move down and continue and break up. No problem with that if it does. Let's take a look at the pound dollar long-term analysis. Well, basically, we're pretty high at the uptrend channel. We're at this, let me make this a bit different color. We have an intermediate uptrend channel here within the bigger blue channel. Let me make that magenta. That magenta is about to break. So it looks like the obviously very strong up move here, not getting that continuation right in here. If we don't continue quickly, then we're breaking that magenta uptrend channel. And there could be a move back maybe to here, to the 786 fib. That 786 fib level is also pretty big supply-demand zone with tops here as well. That could be the bouncing spot. Although we're breaking the magenta, maybe we're still looking at the dark blue line, we're still in that uptrend channel, right? Now, of course, obviously, we're at the 886 fib. 161.80 was this year's high, There was also a 886 fib and a weekly trend line. So obviously this was a very, very big resistance spot. So here too, as always, when you get into these situations, will the short-term momentum be enough to keep pushing and pushing up and squeeze out those long-term bears, or the long-term bears be able to convince the short-term momentum to turn, break out of the blue channel, and fall? So what I'm waiting for is a break above 160-170, above, I mean from a long-term perspective, we'll have a move up to 163.30, or waiting for a break of the blue uptrend channel to take it down. The other option, of course, is waiting for the price to reach the bottom of the blue channel for upside. That's the long-term perspective. So you have a green box here, and a green box above 163.30, and a green box at the bottom of the trend channel. And then you got red boxes upon the break of the blue channel, and primarily when we start breaking also these support levels, these tops in here. And you can see the zones already for downside right in there. So this is really this is just fact, not really opinion. This is just how the currency is set up. And if you look at trend lines, fibs, it's all more a question of map reading than thinking. I'm not thinking. I'm just looking at the currency and looking at these lines and trying to interpret what the currency is telling me, not what I think the currency is what I'm telling the currency, right? I'm trying to interpret what it's telling me and trying to judge how and what spots the currency makes sense to trade. And with using trend lines, moving averages like this, horizontal levels, fibs, and divergence, you can make that roadmap for yourself and make it as neutral as possible. And of course, you could take a reversal trade here, right? The methods how you trade the map, that's of course how we make our money, but the map is the map, at least if you use the tools that I use. And then how we trade the map, well, that's of course, that will be upon the strategies we use and how we interpret that. And as you know, I'm trading either, I will indeed wait for the break of the blue channel, will not trade it south before that. That's just because of my trade plan. And I know that the statistical likelihood of catching trades within that blue uptrend channel and making picks on that is not worth the trouble and energy and focus. So that's why I don't do that. But if you're good at that and you've practiced that a lot, why not? Nothing wrong with that. But I'd rather wait for more confirmation. Now, making a roadmap like this does take a bit of time, of course, to gain that experience and confidence also that your road mapping understanding skills are on par, let me say it this way, or are good enough for you to use with confidence. That always takes some time. That's why Talantala is always saying screening time. And I promised someone the time factor analysis, by the way. And regarding the time factor, basically what it all boils down to is that price is, the chart is a price-time relationship in most cases. If we use Japanese candlesticks, it is, unless you use range bars. And what it only says basically is that if you can't break a resistance or support within a time frame, for example, we're moving up and we're not breaking a high, or we're in uptrend, so we're not breaking the high fast enough, then the likelihood of continuation or reversal is higher right there. So if you had an upside, day candle, day candle, day candle, day candle, pause, pause, continuation. We broke the high within 5 candles. But if you have a moment where you don't do that and you make retracements more than 4 or 5, then the likelihood that you'll get weakness here is high. And you'll probably see a reversal or at least a bigger retracement before you could still see the upside continue. So time factor in Elliott wave terms, you know that this is a high likelihood of a B wave, for those of you who like Elliott waves. Time factor can help a lot with Elliott wave analysis as well. So what that translates into, for example, if we look at this weekly chart, or let's go to a daily to make it. I mean, you can use it on all time frames, even on 5-minute charts, in fact. I remember an odd yen example here. Let me get rid of these lines. All right. Yeah, that was here. Real life example. These lines are annoying me. 1 second. All right. Real life example where we had a lot of down move here. All right. And you can see if you look at the day candles, look at this. 1, 2, 3, fourth day breaks the bottom. This is, folks, really listen up, because if you pay attention to this, it will give you a tremendous advantage, really. 1, 2, 3, fourth day breaks the bottom. 1, 2, 3, fourth day breaks the bottom. 1, 2, third day breaks the bottom. Second day breaks the bottom. 1, 2, 3, 4, 5. Sixth day couldn't break the bottom. It's always around 4 to 6. Sixth day couldn't break it, and at that time, when we couldn't break it, I knew that the chances of a break, immediate break and continuation of that trend was statistically, it's all about statistics, right? You never know 100%, was drastically reduced, and the likelihood of a retracement was higher. What can you do with that knowledge? Obviously, you have great advantage of the market because you're not looking for shorts anymore. You're staying out of the market, or if anything, you're taking a reversal long right in there, right at the bottom with a super tight stop loss, and aiming for something that you find realistic, which could be this green band here. Or it's not green in this chart, it's black. All right, a real life example of using time factor to know that this downside at that moment is not continuing. Now obviously when we get a bigger correction consolidation zone, then you can still get that continuation, right? And we did. And you can use it on a 5-minute as well. Look at how far impulses go on a 5-minute. Let's take a look. You'll be surprised. Any impulsive move, you'll see on a 5-minute chart, you'll have to especially be careful of the 6th candle. That could still break. What we're looking for is every candle, obviously here, breaking the high, and if it doesn't do it every candle, then at least every 6 candles. We got 1, 2, 3, 4, 5, 7th candle broke here. That's because of the news. 1, 2, 3, 4, 5, 6. Especially if the 6th is pushing, watch out for the 7th. And you can see that in most cases, when you have an impulsive move, the move is over when you have something like this. That was the impulsive move, right there. Let me take a look if I can find another example. That's how big traders know that they can keep alonging it within that time frame. So they'll be keep longing the 1 hour minute, 1 minute charts, 1 minute charts, because they know that the time factor, it is the time of the biggest impulse. They know that that is the impulsive time of the currency. That's it. It's going to go move right in that 1 hour, 15, whatever it is. But they know once 30 minutes it doesn't break, or 35, that's it. That was the impulse. We're going in correction again. It's tremendous knowledge if you have that. Here you can see up, 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 up for continuation. Here a bit of a bigger stall than usual. In fact, I'm just said 5 minute. It's a bit more shakier with the 5 minute world than other higher time frames. You get a bit bigger stall. But usually if you have a stall like this, one thing I should add, and you still have one more spike, that usually is the last spike. So if you see like this and you still get that one more push up, then that usually is the last one. And then if you get a consolidation like this that doesn't break in 30 minutes, then you know it's over. Right? And it is. Totally flat after that. Upside flat. The 5 minute world is far from perfect, but it will give you definitely good guidance, especially if you're shorting an impulse, where the impulse could finish. And you can use it for a trail stop as well. Because if you're in that short and you want to know where to take your profit, you could trail stop using time factor. Just ride out, wait until the currency makes a 30-minute non-break, and you can see that happens here. If you get something like that, just take it out right in here, close to the bottom, because it's not going to break that bottom. You've just optimized both the time factor and your take profit. Right at the bottom, you're taking your take profit. And you can never know what the best take profit is beforehand, because you don't know where the currency will stop with this impulsive move. If you use time factor, you can catch the exact bottom and also be in the trade the shortest period of time and not have to live through all of that junk here, and then still be able to re-enter the trade upon the next break and just not be exposed to this retracement or sideways move, because you don't know if it's going to be a retracement or a sideways move. And you've just reduced all of that nervousness as well, increasing your confidence. So I know there are a lot of people who say it's only about price, but I don't mind, and I'm happy they think that way, because for me it's a great extra tool that not many are aware of, I think. Alrighty, that's that. If you found it interesting, let me know. If not, let me know too. I'm just curious about your opinion. Tell me. Diana, the webinar should be uploaded to YouTube, I think, by the way. What is your opinion on time factor? Is it something you're going to use, investigate? Is it something you don't think is going to be useful for you, which is cool as well? I don't care. But for me, it's very big value, as you can understand, from my enthusiasm for this topic. All right, cool. Diana thinks it's interesting. Anyone else want to share their opinion? Or did everyone fall asleep during my explanation? Cool, I got some answers here. Kalen, first of all, it's, yeah, 6 candles. You can use it on all time frames. The only thing is that with the 5-minute world, what you sometimes see is that you do get a 40-minute or a 35-minute, so let's say 6, 7, and still continuation. Then often enough, the next one is the last one. That's something with the 5-minute world. You just have to be a bit more cautious, okay? So I want to warn everyone for that. But higher time frame, like 1 hour, 6 hours, it's a bit more better with the time frames there. Now, someone in here I know a bit better and explained the time factor already, I think, previously, and she's using it. So, and otherwise, what else did we? So let me see if there's any other. Yeah, Jesus is saying that time doesn't exist as a joke. Yeah, okay. Yeah, it is morning. It's not for me. The morning is the easiest to learn something, in fact, but it does depend. All right, good, Kayla. Good stuff. Yeah, there's a webinar on time factor, by the way, so you can look that up, and our educational webinars as well. Cool, Kayla. Maybe that was a while ago, so maybe I learned a thing or two since then that I added. Not sure. Let's do a recap. So one more time, basically today, folks, today all was about FMOC last week still, and the big impulse. Are we going to break to the upside and continue that impulse, or if it takes too long to do that, right? If it takes, we're already, this is, as I said, we'll use the time factor now, 1, 2, third day, fourth day. If it doesn't break by tomorrow, we know that the chances of a break maybe are decreasing there. All right, so we have to keep an eye on that. And in fact, the lack of power today is already a bit warning sign for the bulls that maybe it's not going to happen. Maybe that last FOMC spike was just a spike, and that was a reversal. You know, still too early to tell, but the fact that we didn't bounce off that Shen channel as much as one would expect, and we're actually going through the magentas now, there's still some support, of course, here logically at the bottoms here, at 160, for example, a whole number. You know, so I don't want to call a reversal too soon, as you know. But the fact that we didn't break here, right here, yeah, that's not a good sign for that breakout, for the breakout there, which I was hoping for, of course, especially in the pound. The euro is a bit better because it's more of a bull flag pattern. The pound, in fact, it's also a good bull flag, yeah. It's still, you see, the thing is, even though it could reverse a bit here, or retrace, it's still going back to support. That's the thing. Let's take a look at dollar yen. By the way, it is quite choppy, but if it would break out here, could see some continuation up to 101.50, 101 here. Later on, maybe all the way to 102.30. Aussie too, looking for that continuation to the upside, but here too we're breaking this triangle to the downside. Very funny. So, but once again, 786 and 93.40, very important level again as well. If we can see that upside bounce, the target, in my opinion, is 97. 96.70. So maybe a small trade, small fall down here, but I'm still expecting support. But we have to see how the currency bounces at that level. If it bounces very weakly, it makes a bear flag, well, and then breaks, well, then obviously we're not pushing to the upside, and I might even trade it here to the downside upon the break of that bear flag. If we move down, we bounce off with a lot of spirit, momentum off the 93.30 area, make an impulse, respect the trend line and break. Obviously, I'll be looking for breaks and trades to the upside when we do that here, the break. But we're not breaking at the moment. We're not breaking at the moment. We're not getting that impulse, momentum, continuation, what you would expect after FOMC. Not happening yet. And if it doesn't happen soon, if it doesn't happen after the 7886 and we make a bear flag, then slowly but surely probably going to be looking for downside effect. Right? We'll analyze it tomorrow. We'll give it today. If it doesn't get continuation today, then we'll have to, or tomorrow probably, then the chances of reversals are steeply increasing. The entry? Well, the entry I don't know yet, but you could take a 786 bounce. It's highly likely that it's going to bounce in here, off these tops, off the supply and demand, off the 786 fib. But the question is, how is it going to bounce? Is it going to bounce with the bear flag? You can move to break even because then it'll probably break to the downside. Or is it going to bounce with a bit more momentum? Then you can also move to break even and hang on for the breakout. If you're looking for the breakout, then the only thing you have to do is very simple. Let it move down here, hook back to the trend line and take the next break and take it upon the blue circle there. But the 786 fib there around 93.35, if you're looking for a level, is a pretty strong level, I would say, on the Aussie. Oh, we got pound news, by the way, in 2 minutes. Kiwi is dropping pretty strongly. We're breaking out of that uptrend channel. We didn't get the continuation here, right in that blue uptrend channel. We didn't get it. And reversing. Now we still have horizontal support right around here, where there's that top. Let me make this green. And here as well. Why is that so? Well, we have tops, of course, tops and the supply-demand zone and the bottom. So anywhere in here is still a heavy support, even though we broke that uptrend channel and are moving back to that support. That could have been maybe an early reversal trade, but as you realize, I'm not mentally even really looking for those. That's the thing. Pound yen, wow. We're really respecting that trend line a lot. That's for sure. Now we're back at the band, and the band is pointed up, so we could get a bounce here, move back to the trend line, and then break. Also, we're at the 4-hour band. So my primary interest is a break above this green line, because then we'll be breaking above this band. And you can see when we do that, look at the previous examples, what happens if we use the band as support? Most of the time, good upside, right? Except this one here, went sideways. So something like that, as you can see, obviously is where my mind is focused on. That's the one I like. And you can see that price is about to break out. We have our black band is very close to our green band here. You see that? So they're getting squeezed. So we're at a talking spot. Preferably I would like to have that because that's with the trend. Obviously, if we break below here, that's counter trend because the moving averages are not aligned. Keith is asking, how far past the trend line do you enter your breakout trades? How far past a trend line? Not sure what you mean, Kate. Can you reformulate that? I'm trying to figure out, but if yeah, with my breakout trades, I'm trigger happy and take the break of the trend line. Indeed. But I mean, there's nothing wrong with waiting for the pullback, taking the continuation. It's just that I use the 50-minute chart as the trigger chart. That's why trigger happy. But as it breaks the trend line, yep. So it's good we took it off. We're a bit more risk averse there, and it's a good thing, as you can see. And one of the main reasons why I don't like it is just the fact that it made a pretty good up move here, and the 50-minute AO was reaching a high. And if we didn't get the immediate break, if we would have broken this resistance about here with the continuous breaks, right, that would have been fine. We can even look at time factor, for example. We didn't get that push here, which we were looking for. That would have been fine. In fact, we got the continuation down, and we took it off the bounce. We moved it for break even, which was perfect, in fact. Although we didn't win, we didn't lose, which still saves money. Let me delete that EJ, in fact. It's still on, but let's take a look at the pound news, and then we'll probably wrap it up. I'm seeing that time is flying, in fact. Pound news a bit negative. Well, I have to admit that the Aussie yen really didn't get the continuation as yet. I mean, we had this beautiful spike up, stopped at the 382, stopped at the 50 fib, didn't stop at the 618, but stopped at the 786, but not able to continue up. Just stopping at those fibs, but it's getting rejected every time it's moving up, more than I would have expected. I thought the 786 fib was really deep bouncing spot. That's why I took this breakout trade. In fact, one of the other reasons as well is just because it was a 786 fib bounce. And those are usually the turning spots for more upside, especially after strong momentum like that. But nothing is the case. Here we got a rejection wick. That's why we took off that trade. And we'll have to see. Do we get if we do move up from here, are we still looking to take that trade if we break that trend line? Something like this, because I'm very interested in upside. We could bounce here, but we can also bounce at the 886. If we break this bottom, obviously I'm not a bull anymore and looking, neutral, or maybe even looking for downside. We'll have to reanalyze that. Yeah, that's fine too, Thomas. If your strategy is if that's your strategy, that's fine. But I've tested this strategy so long that I know that if I get a situation like this, there is a good chance of continuation, even if there's short-term resistance. And you have to also realize that there's always going to be some filters blocking a potential trade, because if you take everything into account, you basically would never trade. So I ignore the short-term resistance with my breakout strategy. That's why. But you see, I have a method of still exiting, as you realize, even if we didn't get the break. So if we got the break, that's great. If we didn't, then no problem. In this case, nicely got out for break even. That's basically what it is. Yeah, Thomas, the whole trading strategy of mine was this. Let me show you. It was this trend line break right in here. You can see the up move with the trend correction, and if we're breaking that trend line, we're expecting that continuation. That was the indication confirmation for the long. the break of the trend line and the break of the 5-minute fractal there. Yeah, that's my whole strategy. It works greatly. The results are great, and that's the whole strategy. So no, that's the whole thing with breakouts. That's the whole idea. And for you, maybe the strategy is new, so you don't, I can imagine for you, you're puzzled by it, but that's just the strategy setup. Pure, simple, tested, works, makes profit, and you just ignore the short-term resistance. Only, of course, if there's long-term, heavy, daily, 4-hour, weekly resistance, well, not even 4-hour, daily, weekly. All right, it's based on the fact that you get, it's a breakout. It's based on the fact that you get the bounce here and it just keeps on moving up, 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 and eventually this impulse finishes, and then you'll get a retracement of this impulse, of course, back to maybe the 50, and then it continues. So instead of waiting for this first impulse to finish, basically you're trying to catch it at the bottom of that impulse, because yes, it got stopped here in this case, but in other cases it keeps posting 1-hour candles like this, stops somewhere here at this resistance level, right in here, stops at the left, makes a retracement there, and then continues. And then we would have caught it somewhere in here with a take profit here, and you got a good trade there. Well, if you want a confirmation on lower time frames, nothing wrong with that. Then there's absolutely nothing wrong for doing that. There's you see, you can definitely do that. Wait for this, wait for the confirmation. No problem at all. And in fact, most of the time I do that for the 50-minute chart. I want a respect for the trend line on the 15-minute world. So what I, in fact, with that said, is that if I have a trend line and you got to move up, what I want is that lower low, right? And the next break is mine, because then you get the lower low here and the higher high here, right? So that's definitely very recommendable, in fact. And you did have that here as well, right, with higher highs, higher lows. Just ran out of steam. But it's just a small practical difference, a particular strategy that I implemented. Otherwise, the things you're looking for are the same, basically. We're both looking for those higher highs, higher lows on a lower time frame, like the 50-minute world. And in fact, everyone trades the same. Everyone trades either trend, reversals, or ranges, takes breaks, bounces, pullbacks, continuations, and trades impulses or corrections, right? So we're just trying to. The only thing that, of course, people use differently is tools. I use trend lines, fibs. Not everyone will use the same roadmap skills, tools as I do, but of course, logically. But I think that you don't need anything complicated to really be able to understand that market. Well, I would say it bounced off here, a 1-hour lower high here, or a new lower low and bounce off the 886. Both are bouncing areas. But I wouldn't want to trade it personally here or here. I would rather wait for that breakout. Let me show you an example otherwise of a New Zealand dollar here. You can see here, for example, if you take this breakout trade right in here, you're in fact going long right in front of that some resistance here, right? You have on this 1 hour chart, you have lower highs and lower lows, but it's just a pullback within the uptrend. You got an up impulse, pullback, continuation, right? Maybe that's the FOMC, so it's not maybe the best example, but that's basically the idea, is that when you break that trend line, even though you have some resistance, it's going to push. That's the idea. Let me say it this way. Oh, cool, Thomas. TDI, never heard of that. Yeah, then we're definitely using the same tools. I think personally the best ones. So that's good. Alrighty, folks, I guess we're going to wrap it up. It's anyhow 30 minutes after our end of the session. So not getting the breakouts, what I was looking for, in fact, but we'll keep an eye if we get a turn later on today. It's going to be interesting to see if we finally get those breakouts or not. Pound is moving up a lot, so the euro pound did break to the upside. I'm not a big fan of the euro pound, but it is breaking here. Kiwi moving pretty fast to the downside. Let's see if we get the bounce around 82.50, 82. Alrighty, well, thanks so much for being here. And as I said, if you want to join tomorrow or Thursday, anytime, September, October, I didn't get much response to the free indicator. I guess not that interesting maybe, but anyhow, it's for free. So anyone who registers during those sessions, as you know, just to emphasize, it's yours. Thanks for being here, and hope to see you tomorrow and Thursday, and wish you all great trading. Cheers.